ICT says you can quit your job from just this one strategy alone, one setup on one time frame that happens at one time of day. Although it sounds very simple, there's so many videos on YouTube teaching this strategy wrong. So I'm going to go over absolutely everything you need to know step by step with a full trading plan. I'm also going to share with you a secret hack that nobody's showing on YouTube. And I'm going to share 3 live market examples that get harder each time. So make sure you stick around and watch every single example to understand the strategy fully. Let's get into the trading plan first. So the ICT silverbullet strategy. And if you want to get funded guaranteed, click the first link in the description below, because our bot will pass the challenge for you guaranteed and get you onto the live stage and the live funded stage so you can make profits using the strategy once you are funded. Real money. No demo profits, real money. So click the first link in the description below because places are running out. So the risk management, which I recommend, especially for funding challenges, if you are doing the funded challenges yourself, 1% per trade max is the best risk management. Why? Because it gives you enough room for your daily drawdown and the max loss overall. However, you will pass the challenge over a series of trade using this 1% risk. We're also going to look for 10 handles to the next draw on liquidity for indices and 15 pips to the next draw on liquidity for forex. What this is basically ensures that you take enough profits and there's enough room for your trade to actually play out when you're taking profits. And this is what ICT recommends himself. The POIs we're going to be using are liquidity sweeps, fair value gaps, and balanced price range. If you don't know what the balanced price range is, I explained it on my last video, so check it out if you haven't already. However, I will show you on the live market examples. The trading plan is going to be on the PM session silverbullet. It's 2 to 3 p.m. New York time and 7 to 8 a.m. London time. So it's only a 1 hour window. It's not long at all. You're literally looking for one setup on one time frame in a 1 hour time window, and no daily bias is required. I don't know how much easier you want it to be. So on the 1 minute time frame, we've got a whole checklist for you over here. So on the 1 minute time frame, we're going to look for a liquidity sweep on either side. And remember, there's no bias over here. It can be on either side. After this liquidity sweep, we're going to look for a market structure shift in the opposite direction to the liquidity sweep. And then we're going to look for a fair value gap to enter off in the displacement leg. Our entries, like I said, are going to be off the FVG or BPR, balanced price range. In the displacement leg, I'm going to show you on the 2 variations over here and on the live market example, so don't be confused. Our stop loss is going to be below the full lows if we're taking buys and below the full highs if we're taking sells, because at the extreme of the displacement leg, this is the safest area your stop loss can be. Our take profit is going to be at the next draw on liquidity, like I said over here. However, ICT recommends that 5 handles is all you need for indices as a take profit, and 10 pips for forex pairs is all you need as a take profit. I also recommend 1 to 2 risk to reward ratio, because over a series of trades, you will pass the challenge if you just stick to one set risk to reward. Let's get into the variations. So first of all, an underrated thing that a lot of people miss out when they're teaching this strategy is what is a valid market structure shift. Now, a valid market structure shift is a break of structure, shift in structure, change of character, all essentially the same thing. However, it has to close below the structure. A body has to close below, and usually an FVG is created. The main things we're going to be using are the POIs and the PD arrays, and we're going to be on the 1 minute time frame only. The pairs that works best on forex is Euro USD and GBP USD. However, for indices, it's S&P 500 and NAS 100. 2 variations to this strategy. The first variation over here, you get a liquidity sweep. Okay, then it makes a higher low. However, you don't get a liquidity sweep with this high over here. It makes a lower high instead, and then it breaks structure. It does a market structure shift. Then we look for the entry of the fair value gap in the displacement leg, and as you can see over here, I've just marked out 50% as a refinement, consequent encroachment. I've also mentioned this on my FVG video, so if you haven't already watched that, go check it out. And these are the fib settings, so you guys can just copy that. Now, also the different variation for this is that a liquidity sweep occurs before the market structure shifts. So as you can see, there was a liquidity sweep here. However, there was no market structure shift. Then price made another high, higher low, higher high, swept this liquidity. The short-term high was swept, and now this short-term low was also swept. This market structure shift low. As you can see, break of structure, change of trend, change of character, all essentially the same thing. The common denominator is that price actually closes below with a body. Okay, so it has to close below the market structure shift low with a body. Then we just get the entry of the fair value gap in the displacement leg or balanced price range if it is present. And I'll show you this on the live market examples. So before we get into live market examples, if you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours in the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded and don't waste time. Let's get into the first live market example, and I guarantee that 90% of you will get this setup wrong, so it's vital that you watch this one. So over here I've delineated the time window, and all I've done is I've marked out the major highs and lows, the liquidity highs and lows to the left of price, right? And all we're waiting for is a liquidity sweep in either direction. However, just looking at price on the left, you can see it is pretty bullish over here. It's impulsively bullish, okay? So let's just see how price treats the highs and lows, right? Okay, so as you can see, price has broken above this high. Let's just see what it does over here now. And as you can see, it's quite convincingly broken this high. And because the trend is bullish anyways, the market is probably going to be going bullish. So if we take sells from here, we will probably end up being stopped out because the market structure is actually bullish. And if you were to look in the previous data over here, you will see that there's a reason that price is bullish, and you guys should backtest this and see the reason yourself. However, we know that price is bullish and the trend is your friend. As cringy as it sounds, the trend is your friend, and we don't want to be getting stopped out because we're going against market structure, which is the basics, right? So let's just see what price is now. Okay, so as you can see, price has dropped down. Okay, you could say it's on a market structure shift. However, now it could be making a higher low in this area, right? So there's a chance that price could go up. So we're not going to be looking for sales anymore. What we're going to be looking for actually is now buys. So now the real liquidity sweep was actually to the downside. So we're going to be looking for buys in the opposite direction now, right? So let me just get rid of this and leave that on. Okay, now let's see what price does from here. So it has swept one set of liquidity and the market structure shift high is over here. Now it's swept another set of liquidity, and the next market structure shift high is right here. Okay, so as you can see, price broke structure quite nicely over there, and let's see if price has made the FVG in this displacement leg. In this displacement leg, where's the FVG? Right here. Just mark this out, and what you can do as well is mark out 50% like that, and enter off 50% if you want. However, I'm just going to go for this because there's not much difference. But you can scale into your trade at 50% however you want to manage it. But I do recommend just entering at the top for the safest entries. So where's the next draw on liquidity, and is it at least 5 handles away, at least 10 handles away? As you can see, this is like 17 handles away, so it's more than enough. So just let the price play on. And as you can see, if you were to put your limit at 50%, you would have been swerved over there. And where is a 1 to 2 risk to reward ratio? As you can see, price has already hit a 1 to 2 just right there. However, I would recommend taking profits at the next main high, because that's the next main draw on liquidity. For example, right here, if is there anything on the left, you guys can backtest this and check this example out yourself and see where you could have taken profits. However, I'm just going to say main high for this example. And by the way, you don't have to take profits at the end of your time within your time window. All we want is to look for the entry within our time window. We can take profits after it. And as you can see, price ran away for over. It went really far actually. It went for over a 1 to 7, right? However, you don't have to catch all that. You don't have to just pass a challenge in one trade. You don't have to. Although it is exciting when you do pass a challenge in one trade. You can stick to a set risk to reward, a set plan, and pass the challenge over a series of trades, and that will make you a better trader. Let's get into the second and harder example. Okay, so all I've done is I've delineated the time window over here, and looking left, you'll be just marking out the major highs and lows to price right now. It has to be relevant to price. It can't just be lows from like all the way over here because we're not in this area. We're in this area. So if price takes out these highs, I'll look for sells. Obviously, if we get the valid confirmation and we get the right narrative, and same thing for the buys. So we just let price play out. Okay, as you can see, it's taking out the lows first. So what do we look for? We look for buys. Now, with this setup, okay, price is taking liquidity. Has it made a market structure shift? Okay, look for market structure shift. Okay, price is closed above. And now there's an FVG been made with these 3 candles over here. And if you haven't already watched my fair value gap video, watch it, because it will fully explain what a valid fair value gap is and all the other types of gaps as well. So over here, this is the fair value gap. And now from here to the next draw on liquidity, okay, yes, there might be enough handles. However, is the risk to reward worth it? So, because we're following our trading plan with the 1 to 2 risk to reward ratio, and now this is an example of why I wouldn't take a trade, right, and why a trade wouldn't be valid. Because a 1 to 2 would be all the way up here. However, this is not it's not at our next draw on liquidity. So our take profit is past the next draw on liquidity, and price could literally just wick this liquidity area out and then not hit our take profit. So this trade would be a trade that I wouldn't take. Although the full setup is there, I wouldn't take it because there's not enough handles to the next draw on liquidity for my main draw on liquidity, right? My main draw on liquidity is from this area at least, okay? And it can sweep this high and then reverse. But let's just see what happens to price now, okay? Because we're not going to be taking buys. All we do is just wait now. Okay, so as you can see, price does tap into that area, which is fine. But now all we're waiting for is a liquidity sweep on either side now, but now to the upside because price has gone bullish. And then we're going to look for a market structure shift. Okay, making new highs and lows. Okay, so now as you can see, price has swept loads of liquidity from these mini highs and mini highs. So now it's swept this high over here and it's ended up sweeping this high. So we look for a market structure shift in the opposite direction. I'll just mark this out for you guys. And liquidity sweep, market structure shift. All we wait for is a market structure shift. Quite obvious. This is very obvious. If you can't tell this is a market structure shift, then you need to do more backtesting. But basically, this is showing that from bullish, it's going bearish now. The market has shifted in structure, hence why the name is market structure shift, right? So now all we look for is a fair value gap in the displacement leg. Where's the fair value gap? As you can see, 1, 2, 3, these 3 candles right here. Can mark out 50% of it, okay? But it would be safer, like I said, to enter at the lower point of the fair value gap, place a stop loss above the high, and target the next main draw on liquidity. And you could literally just target this low over here, for example, or you could target like these lows, like previous session lows. However, I just want to show you the take profit and the main draw on liquidity area. Okay, so now look, a 1 to 2 would land us around here, right here, just past this liquidity point. As you can see, we've got lows over here, and the main low is over there. Let's see what a 1 to 2, how price treats the 1 to 2 risk to reward ratio. As you can see, and remember, we don't have to take profits within our time window. As long as we got the entry and the setup in the time window, then we can take profits after it. So this can go on for as long as it wants. However, I do like taking profits within the same day. And as you can see, if you would have entered at 50% over here, you would have been tagged in. However, it would have been outside of the session. So I wouldn't really want to enter trades outside of the session. As you can see, it hit a 1 to 2 nicely, and that could have been your trade done for that day. Let's get into the third and final example. Okay, so for the last example, a lot of people will be caught up on the wrong side of the market for this example. So just before we get into the example, I want to remind you that the bot will pass the challenge for you 100% guaranteed. And because it's a bot, that's why we can guarantee 100% guarantee. It's got 100% win rate because it's a trading bot. A human can't really have 100% win rate because that's just not possible. However, the trading bot, the automated trading bot, does have a 100% win rate. If you fail the challenge for whatever reason, which has never happened before, you will get a full refund. And by the way, after we pass the challenge for you and you get on the live funded stage, you can obviously use this full free education that we provide on the YouTube to actually use, and the trading plan that we're providing to use on the live funded account and make some good returns. However, you also get 1 month free in the live signals room with some crazy results. You guys can check the Telegram out for yourself to check the proof and testimonials of the signals room and of the bot in general. However, the signals room, you will get free access to that for a month. And then after that, you can trade yourself, or you can join the signals room, whatever you feel like doing. However, if you do want private mentorship, that may be coming in the future. However, I'm not too sure on that just yet. But we do know that there will be 1 month free in the signals room, and you can use the free education and the trading plan that we're sharing on the YouTube to trade yourselves so that you don't blow the accounts. And no one has blown the accounts since joining and since the bot's been launched. However, there is very high demand, so get signed up before your spaces run out, and you will have to pay a premium price. So get it at a discounted price right now whilst you still can. Let's get into the last and final example. So all I've done here is marked out the main highs and the main lows. So as you can see, there's equal highs over here and a low here, not an equal low, but an established low. Okay, you could say equal over here. I'm not going to go marking out these lows right here. However, if we do look left and zoom out a little, you can see that price was actually bullish overall. The market structure was fully bullish, right? The intention is to actually go higher, as you can see. So taking sells in an uptrend wouldn't be a very clever idea. So let's just see what price does. So I'm just going to get rid of this because the session indicators will show the start and the end time. So all we do is wait for liquidity sweep in either direction. Okay, is this a liquidity sweep or market structure shift? Now, I'm going to explain this in another video, in another specific topic video. However, just as a brief explanation, price is going up, and as you can see, price has run away. It hasn't really provided any market structure shift lows. So this is not a liquidity sweep. This is actually a break of structure to the upside, okay? So we're going to be looking for buys overall. That's going to be our overall opinion on the market, okay? So we just let price play out, and all we do is wait for sell side liquidity to be taken out for buys. We can't wait for buy side liquidity to be taken out for buys. It has to be a low taken out before we buy, okay? Otherwise the trade is not valid. So remember, within our time window, we're looking for the entry and the setup. As you can see, liquidity has been swept. Now all we're waiting for is a market structure shift. Let's see what happens. Okay, so as you can see, price did make a market structure shift high over here. However, the main market structure shift high is right here. However, this is still a fractal high. So this would be used as a market structure shift high. As you can see, price made a fair value gap over here. There's also another fair value gap over here which you could enter off. However, I'd recommend entering at the latest one, the earliest one, because that would be the safest, and then to put your stop loss below the low. Then you could target either a 1 to 2. However, because you know price is already bullish, you could target higher levels. However, just for this example, I'm just going to show you a 1 to 2 and show you the solid risk to reward and the trading plan actually in play. So now a market structure shift occurred, and all we're doing is finding the same fair value gap in the displacement leg. Okay, just let price play out. Okay, as you can see, it tagged into this one, and it actually tapped into the main FVG over here overall. So you could have still targeted that and targeted the same risk to reward level. However, I wanted to, for this example, would have you would have literally just taken profits in just a few minutes if you would have entered at this FVG. You can target the main draw on liquidity, for example, over here. However, for example purposes, let's just keep it at 1 to 2 with the worst case scenario, with the worst entry scenario. So let's say you had the biggest stop loss, a 1 to 2 would have still worked, and let me just show you why. Okay, so this isn't a market structure shift. Why? Because the bodies didn't close above. Okay, bodies closed above there. However, price would have already hit your take profit for a 1 to 2. So that's it for today's video. Just a reminder, guys, the link to the Telegram will be in the description below, so you guys should definitely go check that out. If you're struggling to pass funded challenges, or you're just looking to get funded in general, the trading bot will pass the challenge for you, has a 100% win rate, 100% guarantee. If you fail the challenge, you will get all your money back. However, we have never ever failed the challenge, and you will be funded. It's guaranteed. Why? Because it's a trading bot, and the stats show that it has a 100% win rate, right? It's a bot, and it has a 100% win rate. After you pass the funded challenge, after we definitely pass the funded challenge for you, you will get 1 month free in the signals room, so you can actually take trades just following signals and make real profits. No demo accounts, you don't have to waste time on them anymore. You can actually trade on a live funded account. It's a no-brainer, and places will be running out, so secure your spot as soon as possible. First link in the description below. And remember, guys, following this trading plan, this is literally all you need. If you just stick to this one strategy, ICT even said you can quit your job and become a profitable trader from just this one strategy. There's no daily bias. I've shown you how to find the draw on liquidity. Drop me some more video suggestions in the comment section down below. Like this video and share it with a friend. Share it with someone who's struggling with ICT concepts, because this is a very, very easy concept and strategy to follow. That's all for today's video. I'll see you in the next one. Peace.